Welcome back to my live stream. We had a very nice day for stocks today. We had the S&P and the Nasdaq go up. The Nasdaq going up 1.24%. The market just keeps going up. We're going to have a phenomenal end of year in 2024, and it's been a phenomenal 2 years. Thank you very much, stock market. The Dow did not keep up with the other two indexes. The Dow was down 0.25%. The Russell did okay. It was up about 64.64%, which is a good day for the Russell. Small caps have been working, especially if you pick the good small caps. They have really been flourishing. So another good day in what is a very good year. The S&P is up 28% in the last 12 months. That is an excellent year, no matter how we look at it. And what's interesting is we haven't had any big giant pullback. Probably the worst pullback we had was a pullback of about 8.5% on the S&P. Not a whole lot of down action this past 12 months. Before that, it was even a smaller pullback of about 5.5%. So the rally in stocks in general has not been interrupted by some big downturn. A downturn similar to the one we saw in 2022, where we saw stocks on the S&P come down about 24%. But really, since we had that low up to this point, we're up 69.4%. What a rise. What a rise. Beautiful. The NASDAQ's doing even better. If we look at the year, for the NASDAQ, it's up 35%. Cha-ching. Beautiful. It is more volatile than the S&P. It's had some pretty good pullbacks, but 35% is 35%, which is a great, great return. We look at from the low up to where it's at now, it's up 92% in roughly 2 years. That is a great rate of return. It's almost doubling the value of stocks. Needless to say, we are in an expensive stock market, and I'm being careful in buying just stocks that are good things to buy. I'm buying into Amazon because I just want to buy more Amazon. I'm buying a few other selected stocks, but what I'm doing at the same time is I'm getting more cash out of some stocks that I'd prefer not to have as many shares in, and I want to build up a nice cash position. You never know when we're going to make a turn and we see stocks sell off. So I'd like to have some cash ready, so when that day comes, I can buy some stocks. Warren Buffett has really accumulated a lot of cash, which is interesting. He's accumulated a good part of his portfolio, or I should say Berkshire Hathaway's portfolio, in cash, which I know a lot of people are talking about, and really is another thing I consider. It'd be good for me to have a little more cash. I'm probably at like 6% cash right now. I'd like to get that up to 10, maybe 15% cash, and be ready for any kind of pullback that happens in 2025. It is good to have you guys. Looks like I'm getting some viewers online, and looks like Nitchix is checking in. Good to see you, man. Thanks for joining. Let me know what stocks you guys are interested in talking about. There's a string of stocks I wanted to talk about that seemed interesting to talk about. And the first one is NVIDIA. NVIDIA had a down day while the NASDAQ was up. And I'm not quite sure why the market is really turning its attention over to Broadcom and kind of leaving. And I'm not going to say too many negative things about NVIDIA. They're having such a terrific year. Let's just kind of put it in context. The NVIDIA stock's doing great, but it hasn't had a huge rise from, I guess, mid-year to now. It hasn't really flourished a whole lot. Meanwhile, Broadcom has really become the darling stock of the stock market. Look at this rise that it's seen in the last couple of weeks, ever since they announced their earnings. So that's a pretty impressive rise for Broadcom. And Broadcom is in the data center. They have their semiconductors in the data center, and they also have software in the form of VMware. So Broadcom has become one of the more recent companies that is valued over $1 trillion. So Broadcom's doing great. We'll see how these two stocks go for the next 12 months. I think the valuations are pretty extreme. Look at the PE here, 202 is the PE using their current financials. Next year, it's supposed to do much better at close to 40, and they do have pretty good growth rates. So we'll see how they fare. As we look at our friends over at NVIDIA, their PE isn't as bad this current year, and they're actually going to have a better PE next year. So if I was forced to buy one or the other, I guess I'd buy NVIDIA, but they're both doing great. So congratulations to anybody that owns either one. I'm currently not invested in either one. Looks like Bad Omens checking in. Thanks for joining. And Shadow Guy, hey, good to see you. Thanks for checking in. While it looks like you're on hold for doing something, good luck with whatever activity you're doing. So the semiconductor stocks are really interesting, especially Broadcom. I think that one's really just rallied. The other stock that's been in rally mode is Google Alphabet. They have had a couple of things go their way. They came out with their quantum computing report, which basically that they're further ahead than people realized in quantum computing. Now, I'm not sure how quantum computing is going to disrupt other types of computing, but I know that it can handle certain workloads and activities that we weren't able to do all that much before. And things like breaking codes and really doing very accelerated computing that we currently can't do right now. And if that's kind of a new business for Google Alphabet, I think they're really going to be in the driver's seat for one more business. They're the leader in search. They're the leader in streaming. YouTube is the most viewed streaming platform on earth. They're the leader in robotaxi, which I don't believe is currently being priced into the stock. I think that the way I look at Google, it's being priced at a discount just looking at their existing businesses. That doesn't include robotaxi. And now they have quantum computing. So I'm really glad that I own a lot of shares of Google Alphabet, and it was good to see them rise another 3.6%. They had a terrific week last week. So Google is really on the move. I don't think that's going to stop just because the news is really, really impressive. Their valuation's at 2.4 trillion. And look at their PE. It's 26. Again, this PE does not include quantum computing. It doesn't include robotaxi. Those are two really game-changing businesses that the company has coming. So the company has just a great bullpen of businesses that are really ready to come in and keep the company growing. The PE next year is going to be 22.88. So these are really reasonable PE, especially in a very expensive market. Analysts think it's a really strong buy. They think it's not discounted a whole lot. I would agree with that. I think my discount's a little higher than that, but that's pretty close. Overall, strategically, I like having Google Alphabet in my portfolio. I think this is just going to be one of those companies that's going to be worth a lot of money for a long time. Looks like we've got some other people on. Hyper Wizard, good to see you. What do I think about AMD? You know, every time I look at AMD, I'm not impressed with their fundamentals. I'll give you that preview, but we'll look at it together and compare it, I guess, to NVIDIA and Broadcom. And I'll point out what I think makes them different and why the valuations are very different. What do I think about the Uber drop? Nichix, I've been buying Uber stock on those drops. I think that the threat to Uber, you know, the robotaxi threat, I happen to think it's an opportunity. It's not a threat. If you consider Google is coming out with their robotaxi service, but I don't know that Google wants to operate a ride-sharing business. I think they want to license the platform to other companies who would then operate a consumer-facing business. For them, I'm not aware of any business they have where they have like a customer service center and they really have an active engagement with the public. They actually sit behind, you know, businesses that have very little touch to that consumer. You think about Google search, there's no 800 number to call Google search and complain about, hey, I did a Google search and it didn't come out right. Nope, there's nothing like that exists. You think about YouTube, nothing like that exists. You're really just text communicating with whomever is going to interact with you over on the YouTube side, but it's very little touch. So as we look at robotaxi business, I think you have to have call centers with people in them. Should somebody have a problem in the car, all those types of businesses, I think a company like Uber is better equipped to manage a ride sharing robotaxi business. So I think that either using the Waymo system, which is what Google is putting out, or who knows, maybe Uber, partners with another platform provider and does that. For example, they're partnering with the Chinese EV company that does robo taxis in Abu Dhabi, and they're going to be rolling that out. And I believe that there was some partnership coming or was established between Waymo and Uber. So I've been buying shares of Uber. I think Uber has, what makes them super valuable is that Uber has the platform of ride sharing, and they have a huge network of customers that are very comfortable taking Uber rides. Over 1 million people fetch a ride on Uber every single day. They also have the Uber Eats business. So they have such scale that it would be wise for a Waymo to partner with Uber or other technology providers for self-driving or robotaxi to partner with Uber, because they have the platform, they have the users, they have the comfort level, the payment systems are in place. All those things are in place for Uber to take advantage of robotaxi. So I don't think that robotaxi is completely a threat to Uber. I actually think it's an opportunity. What would be changed within Uber is, rather than having drivers, human drivers that are contractors, they would have driverless cars that might be even more profitable. And they can offer choice to customers. Some customers would probably never get into a robotaxi. They'd be just too scared of a machine driving them around. But maybe guys like me in my Uber profile, I would say, yeah, I actually don't care, or I prefer robotaxi. I'll probably ask for robotaxi out of the gate just because I want to try it. I haven't tried the Waymo system yet. But after a while, I'd probably say, I don't care. Send whatever is quickest and least expensive. And then whichever is quickest and least expensive would show up. So I'm buying into Uber, and that's my answer. A little bit long-winded, but wanted to give you an answer since Uber is one of my big bets, and I continue to buy shares. Mike, the dividend investor guy. Good to see you. I'm not doing well lately. My energy, health, shipping stocks are tanking. What are your thoughts on Devon? I think it's Devon. Let's take a look at Devon Energy. I have noticed that energy is really down, and health. I wanted to talk about healthcare stocks. I've got United Healthcare teed up, and I wanted to talk about other companies, and I'll talk about that. And then shipping stocks. Not sure what's happening with shipping stocks. That one, I'm completely flat-footed. But let's take a look at one of my favorites. There would be Zim. So we'll take a look at Zim. So I'll put that into my plan there, Mike. Good to see you. Thanks for tuning in. Ben Peoples, are there any companies you think will be acquired by Google? I think Zoom would be a good acquisition for them. Maybe even a DocuSign. They were trying to acquire a security software company, and the company they were trying to acquire bowed out because it happened during the CrowdStrike fiasco. And that company realized, hey, we're probably worth a lot more than Google is going to pay us. We'll see. But most definitely Google wants to strengthen their portfolio of security. Maybe even a database company. I could see Google buying a database company. But I think the Waymo business, again, I've been following the Waymo business for quite a while. I've been making videos on the Waymo business for over a year for sure, probably as far back as a couple years ago, because I did see that they had um, the lead, because they've been operating robo taxis in Phoenix for a long time, but the market wasn't paying attention to that. They'd rather hear what Elon Musk has to say, even though he has 0 cars operating in the United States under a robo taxi. He talks a mean game, but there's not a lot of evidence of the Tesla business being active with regard to robotaxi. But Waymo's kind of quietly really built a solid platform. They have over a decade of developing that platform. They have a real business. So we'll see what other businesses Google acquires. They will acquire businesses. One of the things that I expect with the new administration being Republican is that they're not going to stand in the way of acquisitions, and they're not going to prosecute big companies for being successful. You know, I'm just a citizen. I'm not making a political statement here, but the way that the Department of Justice has come after Google, to me, is the wrong message to really the business community and really to the average American, if you really think about it. Google built a business on the best idea. When they went into the search business, they were this little company that was going up against giant companies like Microsoft. And they came out with the best algorithms, the best results. So their people worked really hard, provided a better option in search. And they dominated. They dominated by putting out the best ideas, doing it the best way possible, and they became dominant. Well, what's the government saying when they say, well, you shouldn't work so hard, you shouldn't try to be so smart, and you shouldn't try to make things that good because it makes you that dominant? That's ridiculous in my book. It's one thing if Google had acquired, the search business and became that dominant. Over the years, they continue to really just be obsessed with being really good, similar to Apple, similar to NVIDIA, similar to these top companies. That's really a strength of these companies, that the government should kind of stay out of their way versus try to tell them, no, don't work so hard, don't try so hard, and don't bring out such good ideas. Why don't you come out with mediocre ideas? That way you're not as big. That's what I get out of the Department of Justice's activities. And just one guy's opinion, but that's where I stand with that particular topic. So anyway, good to see you, Ben, and thanks for joining. So Bad Omen. Yeah, so CVS really dropped. That one surprised me a bit. I'll talk about it a little later when I talk about the healthcare space. I'd like to talk about that one. And then Chevron's been dropping. It dropped a lot today, which is kind of crazy. All right. So what do I think about Supermicro? So you went short on Supermicro. I mean, that's potentially a really good move. In general, I would not be buying Supermicro shares because I think that there is some trouble there. An auditor just doesn't fire you because they don't like you, or maybe you offended them in a business meeting or something. There's something there that it should be revealed over time. And what that is, I'm not quite sure, but auditors just don't quit on you. So for that reason, I would stay away from the stock. Would I short the stock? I've already shorted Supermicro and I did well. Probably made 50% return in a short period of time. But I'm not going to touch it for a while. I think I got to pump the brakes on shorting stocks because a few of them have surprised me and I've lost money. And I do this to make money. And I'd rather make money by owning Uber, Meta, Google, Robinhood, those kinds of stocks. They're just flourishing and continue to reward me. All right. So those are all the comments we have today. Keep them coming. Thank you for joining, and thanks for all the comments, everybody. Let me pick up where I think I could get started here. I think Mike had some questions around United Healthcare or healthcare stocks, excuse me. Now, it was tragic to see that the CEO of United Healthcare was assassinated in New York. Just terrible. And it's also bad to see the United Healthcare stock go down. And it has been a surprise. I was a United Healthcare stockholder for multiple years and got out of United Healthcare a few years ago. Not because it was a bad business, it's a great business, but because it got an expensive stock. It became a really expensive stock. It has just really gotten the job done for investors. 74% return, and that's with a big pullback that we've seen recently. They pay this tiny dividend, which, I don't own stocks for the dividend. I'd rather see this type of appreciation. But I saw this appreciation. I sold at a good time right around here. And I switched horses, but healthcare has just not done well for the last 2 years. And recently, it's just getting beat up. When we look at United Healthcare, it's getting beat up over the last month. And when we look at CVS, to my surprise, CVS is so beaten down. How far down? Is it going to go down to zero? Look at this PE, 11.78 in the current year. Next year, 8. Now you would think, boy, their revenues are collapsing. Well, let's take a look at revenues. No, they're growing. So how's a growing business get punished this way? It's the market just doesn't like healthcare, and analysts are saying it's 52% discounted. I think it's discounted. When I look at their free cash flows and their earnings per share, CVS is just generates a lot of value. It's just in the wrong sector, in the wrong industry. What's interesting is CVS and the insurance payers are really in a bad zone. The investing community doesn't like them. I don't know how soon that's going to turn around. Elevance is another insurance healthcare payer. They're down. Cigna's down. But when we look at healthcare, there is a little bright spot in healthcare. When I look at small biotech or high growth pharma, I see some good stuff. And let me find probably the stock that I want to show is Catalyst Pharma. So Catalyst Pharma is a small cap, 2.5 billion. They're $460 million in revenue. They are a biopharma company, and they have therapies for rare diseases around the neuromuscular and neurological diseases area. And the company, look at their growth rate from a revenue standpoint, growing really nicely. It is a low number. But when we look at their appreciation over the past year, it's up 50%. It's up 388%. And this is a company that has commercially available drugs and treatments. It's doing really well. It doesn't end there. When I did a stock screen, and I encourage you to look at the podcast episode I created another community member that wanted to go through a stock screen. And when we did that, it revealed that several companies in this space look really undervalued, and they've been performing really well, but they still have PEs that are really reasonable. Catalyst being at 18, and then forward PE being at, call it 16. Analysts still say it's a strong buy. So these stocks are really performing well. It's just a bright spot within healthcare. So I've shortened my list of healthcare payers and decided to keep my investment in Catalyst, keep my investment in United Therapeutics, which is performing well. It has similar attributes. And when I did that stock screen, United Therapeutics came out as the best in class compared to Catalyst, and a third one that I'll come up with in a bit. This stock did well today, but it's done well over the past year. Revenue looks phenomenal. Look at this revenue growth. Beautiful. Green on the screen. And these guys are taking a big shot at expanding to a new business that if that business works, look out. This is really, really going to go places. It's already doing great if you look at the return to investors. So it's great to own this one. And the one that's come out of the community that is on my buy list, just not eager to buy too many stocks too fast. I'm trying to grow my cash position, is Lantheus Holdings. This was brought up, and I forgot who in community. I don't want to misstate it. I think I misstated it during the stock screen. But somebody in the community, if you look at Discord, you'll follow the notes. These guys, this is kind of a little bit of a misunderstood company. You see this volatility. They're still up 23% for the last year. They're up 361 for the last 5 years. Let's take a look at their growth. Look at this growth. Beautiful, beautiful numbers. Nice growth, profitable, free cash. Everything's there. So since United Therapeutics and Catalyst have been doing so well in my portfolio, within a healthcare space, it's just been getting beat up. I'm okay adding Lantheus at the right time. Probably going to wait until January, maybe February. These guys still have fundamentals that look phenomenal. 15.53 for the current year on the PE, and the forward P is only 14.67. So really, really strong fundamentals from these companies. And I see them just continuing to go up. So that's the one area within healthcare, Mike, that I would say that's working within healthcare. But the healthcare payers, man, they're just getting beat up. Maybe there's a lot of fear that with the new administration, they're really going to change things up, and it's not going to benefit the healthcare companies, the healthcare insurance payers. Maybe it's going to set them back, but there's a lot of uncertainty there. And so I'm going to stay away from United Healthcare, Elevance for the time being until that is more clear on whether those businesses are going to be good going forward. I'll just expand into the stocks that are working within healthcare. So you wanted to look at Devon Energy. Let's take a look at Devon Energy. So the energy complex has just been getting beat up right there with healthcare. Man. Now, energy in certain times was just a phenomenal returning sector. Like 2022, that was the one industry that did great. But now it's like not really appreciated. Look at this PE ratio for the current year, 7.5 for the next year PE ratio. Man, how is that possible? How are these stocks so discounted? And it's a expectation that I guess there's plenty of oil and the oil price is not going to go up very much. That might be a storyline that's hurting Devon Energy. Now, Devon Energy, let me read up on them real quick just to remind myself, is an independent energy company. They explore, develop, and produce oil and natural gas. So they're a upstream energy company exploring and finding the oil. And these guys here, they should do well in a high oil price environment. I don't know that we're in that environment. I think the oil price is, sitting in the high 60s, $70 per barrel. And that's an okay barrel price. Like they'll make money, but they won't make excessive profits, which is if oil were to go up to $120, $140 a barrel, you better believe Devon Energy would just take off like a rocket ship. They do pay a nice dividend, but I mean, it's got this stock price going down 27%. I mean, that would not sit well. I'm in Chevron, and it's not been a pretty picture for Chevron, which leads me to next year, in a month from now, I'm going to start to lower my Chevron position. I have 100 and call it 1 or 2,000 in Chevron. I'm going to lower that to about $80,000 worth of shares, just because I just haven't seen great performance out of energy for the last 2 years, coming up on 3 years. And if you, I don't see a story that's going to really help energy coming up. I don't see that story out there. I don't see that there's scarcity in oil that's going to drive up oil prices. I just see that, hey, the oil and energy complex is not really exciting. Interesting. One story that I did hear that doesn't help oil, I was hearing it, on Schwab Live. I think they have a pretty good channel. And an analyst was talking about how China and India are the two countries that are burning a lot of coal. They burn this coal to create electricity. And both of those countries intend on putting a lot of electric vehicles into service, selling them, to their citizens so that they can buy these EVs that would be powered by electricity that is created by burning coal. And both those countries feel like burning coal gives them more independence from an energy perspective. That would be a direct headwind against oil. Oil being used for automobiles as well as other reasons. But if you have the world's most populated country is China, if their strategy is, hey, let's burn coal, create electricity, and then charge up the batteries on EVs versus buying oil from foreign sources to power up the transportation of our citizens. China does not have a lot of oil. I don't believe India has a lot of oil, but I'm not quite sure. I've just never seen them on a, highest oil producing countries. The top two are, number one with reserves is Venezuela, by the way. I know that was a little bit of a surprise to me, but maybe it's a surprise to you. Number two is Saudi Arabia. And then there's other countries that are behind that. But when you look at the top 20 list, I don't know that China is near the top. I think they're near the bottom. And I think India is also near the bottom. So that may be a story that is causing investors to think oil isn't going to be as important in the future. Maybe. I'm trying to figure out, why is oil not working? Maybe that's one of the stories that's hurting the market. All right, so that's Devon Energy. I think it's a really good business, but I've been saying that about Chevron. Chevron's owned by Warren Buffett. It's a great business, but Chevron has not been one of my stocks that has been working. I'm even for the year. That's not a good investment. I get a nice dividend, but that's not getting it done. 26% return, not getting it done. When I had Chevron, we came out of the pandemic, and it was a great time to buy here, by the way. I bought shares here. It got it done going into 22. I was sitting pretty on Chevron, but ever since then, it's done nothing. And I got happy with Chevron, bought plenty of shares here, rode some nice, stock appreciation periods. But since then, it hasn't really done much. And again, I don't see any big story that's going to tell me, hey, oil's really going to do something in 25 or 26. So that's my position there. It looks like Matt's commenting on Chevron here. You bought into Chevron. I can't blame you. I think, if I didn't own any Chevron, maybe I'd buy Chevron, but it's probably the third biggest position or the fourth biggest position behind Meta, Google, Alphabet. I think there's one ahead of it now, but I would buy Chevron potentially on this downturn, but I'm waiting for the 2025 year to sell some shares. I don't want to sell them now because I've already got a lot of taxes to pay. It's been a phenomenal year, and I'm going to pay a lot of taxes because I've recognized some gains. So overall, it's been a great year. Got to pay my taxes. I don't want to create a bigger, bigger tax bill for myself. I'll just wait till January and I'll scale back some of my shares for Chevron. So Mike, we'll see how that rolls. I know you're a dividend investor, and I hope that things turn around in the energy space for you as well as in the healthcare space. It's two spaces that traditionally have done well, but these last couple of years, not so much. All right, so I'm as stubborn as a mule. Got it. Yeah. I mean, I'm with you that over the long haul, if you know how to buy stocks and hold them, you're going to make a lot of money. And sometimes you got to hold when holding is not very comfortable. But I respect that you want to hold your stocks. When I look at Devon or Chevron, I see discounted companies, but it's not what I think. It's what the market thinks when it comes to a stock price. In the near term, stocks get priced by really the voting of the market, what the market thinks is a good stock at the moment. Over the long haul, the market will weigh how valuable truly those companies are. I think that, like, for example, Broadcom, I think is priced too high. I've been thinking that way for a while. The market doesn't care what I think. The market's really been shooting that stock up. I think over time we'll see Broadcom come down to earth, but we'll see. We'll see if I'm right or if I'm wrong. Time will tell. And so, Matt, you also agree that United Healthcare are hugely discounted. I agree with you. And when you look at the healthcare space, the insurance payers, they're just really desirable businesses. They're like, growing, set it and forget it kind of situations. You look at their financials, look at this growth. Just keeps growing. Top line revenue, $305 billion, and they still grow at 9%. That's a quality business. Apple would love to grow at these levels. Apple doesn't grow, and they get valued differently because they're a tech company and they're a darling to the stock market. We'll see when this turns around. I'm going to keep an eye on it. When it turns, I will be a buyer. For now, I'm going to keep some cash around because I think wouldn't be surprised in 2025 if we have a nice correction where we get prices coming down quite a bit. All right, so let's talk about shipping stocks. So Mike asked about them. Elon's asking about Zim. If you guys follow me, you know that I've been an investor in Zim. And I sold in the low 20s. I forgot what my sale price was. I bought recently just temporarily to get that dividend, which was massive, but I didn't want to keep this stock very, very long. It is going sideways. The market doesn't know what to do with a company like this because these are businesses that have feast or famine, right? You had boom, 168% growth in 21, bust. 23 came down 59%. Now we're growing again. If we look at the quarterly growth, 117%. Get out of the way, NVIDIA. Zim's coming to town. But the market just believes that these are highly cyclical businesses. You have, booms and busts. And I tend to agree with that, but I do know that Zim is a high quality company. I've been in and out of Zim for 3 years, call it. And I've made money, but in my research of Zim, I think the company really is in it to make their business stronger and stronger. When they had a lot of surplus cash, they bought new ships. Their ships are fairly new and operate quite efficiently, which is why the business is so darn profitable. You look at their gross profit as a shipping company, this is a very gross profit margin. I think if you compared this to businesses like UPS or FedEx, these guys are doing actually better. A good part of it is that the shipping rates were favorable to them in the trailing 12 months, but still, you look at their margins, they look really, really good. And their cash flow is very, very good as well. Free cash flow margin, 34% of their revenue ends up being free cash flow. That's incredible. And that's why they paid that huge dividend. Where's shipping going to go? You know, I would say that if we get into, and before I go there, PE 1.63. Isn't that nuts? That's the lowest PE I've seen that I can remember. That's as low as you can get. And forward PE is going to jump up to 5.27. Incredible. Now, the thing I would say is that maybe hurting Zim and the ocean freight companies is the new administration is really talking up tariffs. If you put big tariffs on Chinese products and other products around that are coming from around the world, are you going to slow commerce between company or countries down significantly? If tariffs slow down the global economy, which they can do, maybe even pause the global economy, and that causes shipping rates to drop substantially, Zim is going to take it. Is going to take it right on the teeth. Their profitability will evaporate. Maybe that's what investors are really worried about. And that's why we're not seeing an appreciating stock, even though it's 102% higher. And that's because you had a trough. You had this stock trading at $84 a share. It sold off, and you're comparing the 12-month against a very low number when it hit the very low point in the last 5 years. So you hit this trough. It was great to buy here, which I did. And then I sold in the low 20s. I thought the stock, I would keep it until it hit 30, but I chickened out. I just felt like, you know what? Don't get greedy. Cash in that gain and call it a day. I'm glad I did so. I don't know that the shipping industry has a story to go up for the next 3 to 6 months. We'll see how things play out in 2025. Again, the message of using tariffs quite often and as really a tool for negotiation, that could really slow things down. And we may have seen the best quarter for Zim in the latest quarter. And here's why I say that is if U.S. companies know that a trade war is coming with tariffs being really disruptive, they probably ordered enough inventory to stock for a year. So they saw that, Zim had had more cargo. They had more volumes of shipping. And they had higher rates because there was a higher demand on the whole network. So if that was the case, we may have seen the best quarter on the books for Zim, and you may see a big drop. These are all, this is a theory. This is a thesis that I'm working off of. But I could, I hope you kind of see some logic in it, if anything. That's one of the reasons why, you know what, I think I'll be on the sidelines and watch. It's easier to be on the sidelines and watch when, I've got nice gains. Okay. I don't have to be perfect. I just have to know when, I made a substantial enough, money, having a great 2024, coming off of a great 2023. 2022 was tough on stocks. Luckily, that year I did great in real estate. This year as well with stocks, my crypto has just been on fire. My investment in crypto is $71,000, and my crypto coins are worth over $200,000. I've pretty much doubled the value of my crypto portfolio in 2024. And I've only bought a little bit into Bitcoin and Ethereum. And boy, looking at where MicroStrategies is, I thought it was a little bit of an extreme investment in MicroStrategies. Hindsight's 2020, because they are pretty much just on fire. I'm not going to buy MicroStrategy. I'm just going to stay put on Bitcoin. I was buying into Bitcoin anytime it got under $100,000 per coin. I was buying on that day. I don't buy in big amounts, and I'm glad I did so. Now we're up to $105,731 per coin. I would not be surprised if we get to $200,000 per coin in 2025, and I would not be surprised if we get to a $500,000 Bitcoin in the next 5 years. I could be totally wrong, and my Bitcoin goes down to, I don't know, half its current value. But so far, it's just been an excellent asset class that I've been very careful with. I haven't bet the farm on it. I've just put in some money. I continue to just learn and learn. And I'm really glad I invested there, because it's been a very, very good asset class in my portfolio. All right, so that is crypto. Just, kind of passing by conversation. Got some more inputs. Mike, thanks for tuning in. All right, basketball game tonight with your grandkids. You lucky guy. Go have some fun. Nichix. And you. Also, Mercado Libre. Short term. All right, so let's talk about NU. So there's some stocks that are like fan favorites. Let me try to figure. I got too many browsers open here. Oh, okay. Sometimes I get lost in my own little universe here. All right. So New Holdings is a digital banking platform in Brazil, Mexico, Colombia. Over the past year, up 41%. Over the last 5 years, it's been a little bit of a mixed bag, but you see this rise. It's doing quite well. Maybe I should have stayed there, because I like Google, because it gives me the opportunity to show from the trough to where we're at now, 229%. Oh, yeah, that's a good stock. Now, I think New is interesting. Let's take a look at their growth. And then we're going to look at SoFi, which always comes up. And then we're going to look at Robinhood, which is what I own. In the whole space, I picked the Robinhood horse. All right, so New Holdings. You look at their growth, phenomenal. This is a bank, so you got to look at the book value growth of a bank. That's how I value banks, and that's how other investors that look at banks value banks. And I believe their book value, so it's 159. It's grown from 27 cents per share up to 159. That's excellent. Excellent. Very good. So New Holdings is looking good. I think it's a good investment. You got to pick, where you're going with these. They're high growth. They're in a part of the world where people are probably underbanked. They are accustomed to buying for things with cash, with fiat currency. And a lot of people are, opening accounts so that they can, transact. So these guys, I think their growth is not going to stop. I think they could really be something big. They are out of my home country, which is a positive and a negative. The positive being good diversification around the world. So I'm going to look at this one a little closer. I think it's a good company. What do analysts think? They think it's a buy and it's discounted. Yeah, you had a really strong pullback. Yeah, it's looking pretty good. P is 32, forward P is 22. This is a growth company. So give me a 22 PE on a 73% revenue growth rate. I'll take it. Thank you very much. I'm good with new. I'm going to look at it more closely and see if I want to buy shares. Now, the one that always comes up as well as with, in the conversation is SoFi. And I have never owned SoFi. Every time I look at it, I'm like, it's not good enough. Well, maybe it's good enough for a lot of people. It's up 80%. But you can see that people were really betting big on SoFi. It's crashed and it's really come up recently. So good for most people out there that bought it. But the PE is super high. Forward PE is super high. And if you look at their growth, it's good. It's good growth, 32%, 36%. It's not as good as new, but it's there. And if we look at their book value, it's okay. They haven't really expanded it a whole lot over the last couple of years, but they went from negative book value to positive book value. So far, I've always kind of felt like, yeah, it's just not that great of a company. I don't want to be a stockholder. Instead, I thought, I'd rather, if we're talking about new generation financial services companies, I would like to own Robinhood. And it's been one of the best performing stocks in my portfolio. It's up 269%. And you look at their market cap, 38 billion. This has just been, a really good performing stock for me. And I think about the story. Robinhood is not, everything they do is kind of unique and fresh and new. We can thank them for zero cost trades. Now everybody has to do it. The whole brokerage industry is following Robinhood's lead. And this is this little company that just started, and they're making a lot of noise out there. They're into crypto. They're into like a lot of things that is helping them grow. Well, they got into crypto early. Guess what all the other brokerages are doing? Well, they offer Bitcoin on their platforms too. It's like Robinhood's really making the industry adapt their business model. They didn't come in and say, hey, we want to do the same thing that other firms are doing. We just want to do it better. They said, no, we're going to break things. We're going to make things new. We're going to just do it the way we want. So I bet on Robinhood and I bet on Coinbase. Both have been really, really good performers for me. And I didn't invest in SoFi and I did not invest in new holdings. Now, financial services has been a really good sector for 2024. It might be the number one sector for me in 2024. I made lots of money in it. So not against buying new if it has a good reason to be in my portfolio. And I do like buying stocks outside the US. I don't own enough outside the US. I own a couple and that's it. Everything else is here in the US of America. And crypto doesn't have a country. Crypto is pretty much doing its own thing. It doesn't get governed by a country, which is interesting. So that's new holdings for you. I think it looks good. All right. We got a lot of comments coming in fast and furious. Mercado Libre. I don't buy Mercado Libre. I've been buying into Amazon. I think it was a good move. I started buying into Amazon instead of Mercado Libre. I thought that Amazon gave me a better value proposition. And the only problem was that I guess a lot of other people thought it was a good idea. We had a nice pullback. I bought as fast as I could. And I didn't buy it fast enough. And it's been just going up. So Amazon's my play. In addition to Amazon, I own Alibaba, which I think is going to pay off in the long term. All right. And I don't have any fears in Latin America. I think it's, some countries do have some turmoil, but in general, that population, there's just a lot of upside there. I'm not betting the farm on it, but I think some good things might happen down there. So T, I think you're talking about AT&T. And man, look at that. AT&T up 38%, pays a nice dividend. I don't invest in AT&T. Wow, look at that. 5 years, just brutal. They have too much debt. It's a business that's commoditized. They're trying to sell broadband. I'm a broadband customer, and all I could say is like 20 years ago when I was as an AT&T customer, I paid them the same amount for DSL. Fast forward, I'm on fiber. It's like lightning fast. I love my internet. I pay them the same amount. Over 20 years, they cannot raise their prices. So their business continues to get less profitable and less profitable. I want businesses that actually are just breaking economies, breaking business models. Robinhood, Google, and AT&T is not one of them. They are doing well for the past year, but it would not be a long-term holding for me. So I've known of AT&T. I've invested in AT&T over the years. It's just not the business for me. Nitchix, on January, there's another strike from the ports. You could be right on Zim. It's just, Zim is kind of a up and down stock. And I think if you look at the chart, it could be that chart could just continue on for another year or 2 years of it going up and down, but really sideways over the long term. I hope it gets up to $50 a share. I liked Zim. I like them as a company. I just, I'd rather bet on a company that's, back to Google Alphabet. It's a great opportunity staring me in the face. I can buy the stock. I value Google Alphabet. I value Google Alphabet at a 7% discount at their current stock price. At that stock price, I'm getting RoboTaxi for free, and I'm getting quantum computing for free. And I've got this business that continues to just generate free cash. I mean, like crazy. Dominant businesses in search. The number one video streaming platform on earth. An expanding software business. The Google Cloud business is doing really well. So I'll just buy more Google. I mean, I don't need to buy Zim. I've got a great opportunity staring me in the face. This stock has been kept back. When you look at the top 10 stocks, like Tesla is really on the move. Apple's been moving higher. I don't understand that. They're not growing the revenue, but the market loves Apple. And I think Google's kind of been left behind a bit. I think there could be tremendous upside for Google Alphabet. And I'd rather be buying into stocks like that or Amazon. Amazon's gotten up a little bit, but I'm still buying shares. I want to buy more Amazon. Or I want to buy Catalyst Pharma. Why do I want to buy Catalyst Pharma? Because they own a patent on a drug that saves people's lives, and it's in high demand, and more doctors are discovering Catalyst. United Therapeutics. I mean, there's just so many high quality businesses that have more desirability to me. Amazon, not too long ago, I saw a nice discount available. Now it's priced, I think, at a 5% premium. I still buy shares. I need to own. Amazon needs to be the third most valuable stock in my portfolio. That's where I'm headed. And I may have to overpay a little bit, but I owned Amazon. I did great with Amazon. I sold my position toward the end of 2023. I regretted it, and I need to build back the position. And lesson learned, don't sell great companies if they continue to just drive up the value of their companies. So Zim, yeah, I mean, we'll see where it goes. Looks like you know, new is, the thing about new holdings, you saw the volatility in the graph. It could go up real nicely, but it could also, go down, and you sit there thinking to yourself, why the heck is it going down? You see these, real big drops. You see this gigantic drop. But, if you believe in the business and it's strong, I wouldn't mind having a stock that did do business down in Latin America. I think Latin America has a lot of things going for it. It's not going to be as smooth maybe as US stocks or Japanese stocks, but I think it has a lot of upside potential for the future. Yeah, we'll see. SoFi has never been an investment of mine. Not sure what that means. I mean, SoFi is really popular. I think people are really betting big, but the banking business is not all that great, right? It has there's a lot of touch to the customer. It's a high cost business. So it's not like, you're a software company with 85 or 90% margins. Banking, very low margins. You're hoping that you continue to grow and have a very good net interest margin. So we'll see. With regards to banks, pure banks, I own Citigroup. That's the bank stock that I have. And this comment. Okay. I think you're referring to SoFi. Okay. All right, cool. So we covered a lot of ground, and I think it'll be interesting to see how this week plays out. And Matt, I don't know if you missed it. I covered Robinhood. It's one of my big holdings. I love the stock, and it's been doing great. I not buying more shares, but the stock's just been rocketing up. They are catching a lot of tailwinds with crypto, but a lot of things they're doing, again, are breaking established business models, and the other players that have been around for 50 years have to adapt to what Robinhood's doing. And it's really fun to watch. It's fun to be a stockholder of Robinhood. So we will see how the market behaves this week. Let's see if we've got any inkling of the market tomorrow. I don't think this is accurate. It's too soon after the market closed to see where it's going to open. Here we go. So maybe gives back a little bit of what it gained today. We'll see. But we've got, I think, 10 or 11 trading days left in December. This week's the last full week of trading. We got 4 days. Next week, we got Monday, full day. Tuesday's Christmas Eve, so it's a half a day. And then we get Christmas off, and then we come back on Thursday, Friday, full days. But I think a lot of people take next week off. So trading will be light, and we'll come back to end the year. 2 days of trading the week after. And then we will close the books on 2024. It's been a good one. It's been a very, very good year, and look forward to seeing how 2025 does. So everybody, thanks for tuning in. I appreciate it, and really appreciate all the comments that came through. Everybody, good luck with your investments, and I will stream as often as I can. Everybody, take care.